Welcome to the Smart Business Revolution.
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 You want a revolution?
You say you want a revolution?
Revolution. The revolution.
It's going on right now.
Welcome to The Revolution, the Smart Business Revolution podcast, where we ask today's most successful entrepreneurs to share the tools and strategies they use to build relationships and connections to grow their revenue. Now, your host for The Revolution, John Corcoran.
All right, welcome everyone. John Corcoran here, the host of this show. If you're new to the show, go check out some of our past episodes. We've got some great episodes with rock star entrepreneurs, founders, CEOs from Netflix to Kinko's, YPO, EO, Activation Blizzard, Lending Tree, and many more. I'm also the co-founder of Rise 25, where we help connect B2B business owners to their ideal prospects. And this episode is part of our digital money series, where we are featuring top entrepreneurs and thought leaders working at the heart of this evolving and growing field of our economy. There's so many terms being thrown around today, from Bitcoin to DeFi to crypto to NFTs. And the goal of this series is to educate more people about what these important terms mean, how they may affect our economy and society in the years to come. This, of course, is not financial advice, but it's just a couple of guys who are figuring it out and sharing what we've learned so far. My guest is Ryan Villanueva. He is an entrepreneur and an educator who has consulted for the United Nations, national governments, and billion-dollar unicorns. He is a senior consultant at Cruise Consulting Group, where he helps entrepreneurs to increase revenue, profitability, and valuation of their businesses. He's also the co-founder and chief education officer at Delegate Model United Nations. It's a K-12 education company that empowers students to be global leaders. And before becoming an entrepreneur, he was a risk analyst at Goldman Sachs during the 2008 financial crisis, actually helping to advise with corporate treasury strategy. And so we connected through Entrepreneurs Organization, where he's past president of the Boston chapter. And I thought it'd be really interesting to talk about his perspective. He's studied Bitcoin and crypto, and just given his background and experience, I thought that would be really relevant. Of course, this episode brought to you by Rise 25 Media, where we help B2B businesses to get clients, referrals, and strategic partnerships with done-for-you podcasts and content marketing. You can go to Rise 25 Media to learn all about it, or email us at support@rise25media.com. All right, Ryan, such a pleasure to have you here today. First of all, you were really impacted by Model UN as a kid, and that's kind of how you ended up starting a blog that eventually became a business. Right. You grew up in Southern California. How did you get involved in Model UN as a kid?
So firstly, thanks for having me on the show. This is a real pleasure, and appreciate you reaching out on this. I guess my entrepreneurial journey started because I did Model UN as a freshman in high school growing up in Orange County, California. I was fortunate to go to a large public high school. We had a lot of great programs. One of them was the Model UN program, where it was actually a class, honors history, from like 9th to 12th grade. All the best students at my school did Model UN as a program. And so I wanted to do that too. And it really helped me learn about global issues. It helped me learn public speaking skills and leadership skills. And it's the reason I got into college. And I ended up going to Yale. So I went from the West Coast to the East Coast. And I did Model UN at Yale. Again, it helped me find my place at Yale. And in my senior year, when I thought I was done with this activity, I decided to start a blog about it and just download everything I thought I knew about Model UN and go off into the sunset and go work on Wall Street in 2008. And did that, survived the global financial crisis. And at the end of my time there, I decided that I didn't want to continue on Wall Street. And instead of going back to business school or pivoting into consulting, I thought I would give it a try. I always had this idea of taking this thing that I loved and this blog and turning it into a business that would teach students all over the world, Model United Nations, and decided to quit, leave Wall Street, partnered with one of my best friends who I made through Model UN. And together we founded this company, Best Delegate. And over the last decade, we've had the pleasure of working with students and teachers in schools all over the world to teach them Model United Nations. And that's the reason why I joined EO, and that's the reason why I'm an entrepreneur today.
That's really cool. And I want to hear, I want to break it down a little bit further. But first of all, before we do, you joined Goldman Sachs in 2008. I'm sure you had no idea what was coming at that point in time. Take us back. What was that like as, Bear Stearns goes under, bailouts are happening, just a crazy time to be on Wall Street. What was that like?
So I was just a senior in college, like looking for a job, right? And going to Yale, you go into your senior year, everybody's going around like in suits, they're going to interviews. And I did not study economics. Like I was a poli-sci major, and I kind of started freaking out. And I was like, I kind of need to get a job. I literally applied to 100 places. I think I interviewed at 10, and I got this one job offer at Goldman Sachs in their corporate treasury department. And,
what was it? It was the political science background that they thought that this guy is good for managing money. How did that go about?
I think the one thing that helped, because they looked at my resume, obviously, and it's like, okay, you've taken like 2 econ courses. Like what are you doing here? The one thing they honed in on was the fact I put on there personal finance and like portfolio management, and how I'm playing around with my own, little bit of money to, explore stocks. And, I was following the blogger Ramit Sethi. This is like back again in like 2008.
Ramit. Yeah. I will teach you to be rich. Yeah.
Yep. I will teach you to be rich. He's still a big role model to me. And just started talking about that in my interviews. And I think, what firms like Goldman are looking for is like, they know that these are young students, like come fresh out of college. Can we train them up into what we need? Right. So I think they saw that in me in those interviews, and I was just thankful to get a job. That's what I wanted.
And then as everything's crashing, as Wall Street's just kind of brought to its knees, what was that like for you?
So I remember walking into the office on September 15, 2008. I was literally like 1 month into my job, and the markets were tanking. That's when Lehman Brothers filed for bankruptcy that day. And my managing directors and VPs are like kind of running around the office with their hair on fire. And I'm looking around at the other analysts and associates, and I'm like, is this normal? And they're like, no, this is not normal. This is what we've been training for. Like, this is our moment, right?
Wow.
Because as I would learn, the job of corporate treasury is to manage the liquidity, funding, and capital of a corporation.
Yeah.
And the financial crisis was primarily a liquidity crisis. Everybody was freaking out about their liquidity positions. We can think of it as cash positions. And that was our job in corporate treasury, was to model the risk of a liquidity crisis and tell upper management like how much cash or liquidity we need to hold to survive a liquidity crisis. And, I was on the liquidity team. That team is responsible for the modeling, like forecasting what would happen in a crisis. And to the credit of that team, and again, I just joined, so I'm just like learning this stuff. They modeled it out pretty well. And thankfully, upper management had listened to that team in the 6 months prior, after the Bear Stearns bankruptcy, or not bankruptcy, they had got acquired by JP Morgan, to increase their liquidity position. And the amount they increased it to was just enough to survive until, yes, government regulation, regulators could come in, we could pass TARP and get those facilities in place and actually like stabilize financial institutions. But I really do think it was the work of like that team that really helped Goldman survive the financial crisis.
And you have to speak in small words for me, because I was an English major and did not go to any Ivy League school for sure. But I imagine corporate treasury is a little bit more involved than just, all right, put this amount of cash in the bank.
Absolutely.
And so what does that involve? What sorts of tools do you have in your tool chest, so to speak, going into that crisis?
Yeah. So the biggest one, and this is all in like Goldman's like annual reports and stuff, so people can read up on this. So number one is a model, which at the time was just a really big spreadsheet of, in the event of a liquidity crisis, if these things happen, markets tank by 50%, credit spreads like widen by like how much like cash do we expect to lose? And what are the risks to that? So some examples of that kind of risk is what we think is like debt buyback risk. Like Goldman issues debt in order to generate cash. But in a crisis, the market is going to try to sell that debt back to Goldman. And if we don't buy it back, that is a market signal that like we have no confidence in ourselves. So we have to buy that debt back. That's a huge outflow right there. The other one is what we think of as like rollover risk. Like we have debt that's coming due, which normally we would just be able to reissue again. But in a crisis, that debt comes due. You're not going to be able to reissue it. You're going to end up eating that and need to issue the cash. So there's all these assumptions that you have to come up with in this model. And it's to the tune of like, at the time, I think it was like $150 billion, like something around in that ballpark on a $1 trillion balance sheet. So the first tool is to understand like how much cash do we think we'll lose? And then the second thing to realize is that for these big corporations, it's not literally like $150 billion of cash. We hold it in the form of liquid securities, namely treasuries, so US treasuries. And liquidity, we think of as like, how deep is this market? Like if I need to sell the liquidity into the market, can I get cash? Can I turn it into cash and therefore use the cash? So that's not the only way to like create liquidity, but that was like a big way. And at Goldman, they called it the global core excess, GCE. So we have the model liquidity outflow, we have the GCE. The model liquidity outflow is telling us like hold $150 billion of liquidity. And so the global core excess is like, all right, how do we ramp up that position to get to like 150 billion? And then there's other strategies. We called it like the liquidity playbook. Like in the event of a crisis, what are the levers we can pull to like slow down these outflows and manage that risk, or to increase our liquidity position? So those are like three things that are like, yeah, those are high level corporate treasury concepts. And I will say all of that stuff, like 10 years later at the beginning of COVID, like all of that became extremely relevant to my own small business and fellow entrepreneurs. I had to suddenly think the same way, which is like because of COVID, what's our liquidity outflow? What's our cash outflow? How much cash do I have on hand in my own business? And then what are the levers that I can pull to like either slow down the cash outflow or to generate new sources of cash?
Yeah. So many businesses thinking about that, particularly at the beginning of the crisis. Well, I want to, before we get to talking about digital money and Bitcoin and some of the changes that are happening, stable coins, things like that. I want to take a little bit of a detour and ask about leaving Goldman. So you survive it. You survive this period of time. You didn't lose your job, fortunately, but you decided to become an entrepreneur. And I love to ask people about this, but they must have thought you were crazy. Like I imagine there were some family members that said, you've gotten this dream job, Yale to Goldman Sachs, and now you're going to go off and you're going to work on this blog that you have on the side. I mean, that must have been a conversation that happened for you.
I think you literally spelled it out actually word for word. And by members of my family, yeah, my parents, so mom and dad are like.
Well, you're talking to a recovering lawyer here who did something similar. Okay. So I know exactly what it's like.
But yes, so definitely from my family, from coworkers, from friends, they're like, what are you doing? But I just remember thinking to myself, like, I'm 24 years old. Like I now think of it as like, I'm in a privileged position. Like I'm fortunate to be in this position. Like, yeah, I worked on Wall Street and yeah, the pay was good. And there's a prestige like of working there. And I have that, and that's great. And I don't have like anyone to take care of. Like my parents are in good health. Like I have a lot to be thankful for. So if this is something that I really want to do and I really believe in, which is to start this Model UN company, like what am I really afraid of? Like what's my real risk here? And I was like, I've saved up money. I've got savings. Like I know I can, give this a shot. And I feel like I'm like, I don't know, of all the people that I've met, I'm best positioned to do something like this and to make a difference in this thing that made a difference for me. And if I don't try it, I will probably regret it for the rest of my life. And so my biggest risk is actually the risk of regret. That was my thinking as a 24-year-old. And I was like, I got to give this a shot. And you know what? Here's the risk mitigating factor. If it blows up in my face, I can still go back to business school.
Sure.
Right. I can still find another corporate job and I'll be fine.
Yeah. And how long did it take for you to figure out, how to generate revenue from this business and make it something that could support you? Did it take a while?
Yeah, I would say from 2010 until, let's say, 2013. So my business partner and we tried a lot of different ideas. We were blogging, we were kind of running, one-off workshops for schools. But what we ended up backing into was summer camps, actually. And our core business ended up becoming summer programs that we hosted at top universities across the country. So starting with Georgetown University, expanding to Berkeley, UC Berkeley, UCLA, UC Irvine, eventually Harvard, Boston University, and just other schools across the country. And it was a summer camps business. Our particular unique was it was a Model United Nations summer camp. And that was unique in the market.
Yeah.
And if you're a kid that did Model UN, it became known that if you really want to get good at this activity, go to a Best Delegate Model UN Institute program. And then for parents, families, kids who are hadn't heard of Model UN, but they want to learn about global issues, they want to learn about public speaking, they want to explore this, in school, then, here's this unique offering, Model United Nations. And let's do it at Georgetown. Let's do it at UCLA.
Yeah.
So we had a great offering in the market. And those were in-person summer camps up until March of 2020.
Yeah. I remember, I heard the founder of Galileo summer camps speak in the fall of 2019, I think it was. And, they ended up, my kids went to that summer camp and he's a former EOer. And unfortunately they ended up having to file bankruptcy. What was it like for you, when you realized that your camps weren't going to happen?
That was tough. I'm, all businesses, industries, yours. So, but just from my own experience, those are some of the roughest days as an entrepreneur. And had to execute layoffs in order to, manage cash flow. Had to pivot very quickly into a new business line. So taking our content and creating online learning programs. But I'm thankful that, we had a good team, a good customer community, a good community around us of, people who feel very passionately about Model UN. And that's how we were able to survive made that pivot between my business partner and I like to say that he went on the offense, figuring out new products and programs. And I went on defense. How can we preserve cash flow?
Yeah. And what did you do about that? But, given your background, having worked in what you did at Goldman Sachs, how did you, think about your cash flow at that point?
Funny enough, the same way I kind of thought about it at Goldman, right? We had to model out, do a lot of cash flow forecasting. At the time, did not have a CFO or fractional CFO. So I did that modeling. Number two, came up with a liquidity playbook. So literally just with my partner again, offense, what can we do to generate cash? And then for me, defense, what are the ways we can do to stave off cash? Starting with managing payroll, including for my partner and me, putting our own payroll on pause so that the business can keep going. Obviously managing workers and employees, that was tough. And then eventually with government programs coming online, looking into those, and along with other entrepreneurs and business owners, racing to tap into both PPP and economic injury disaster loan funding. Yeah.
And how do you think about your business in terms of the way that it's positioned now, 2 years later? I look at your website now and you've got an array of different offerings. Do you feel more diversified now in terms of revenue sources and liabilities?
Definitely diversified in terms of financially, revenue streams, but I also now think of it as business units. And, COVID, as tough as it is, as it was for my business, in a way also created an opportunity, which is like, okay, now we have this online education business that we can actually sell at a lower price point. It reaches a lot more people, a lot more students, bigger market, and can be done globally in a way that we couldn't do with in-person summer camps. And now, thankfully, I don't want to call it too soon, but it feels like, all right, things want to come back in person. We want to normalize things. So now we have an opportunity in front of us to keep expanding on the virtual offering at like a certain price point. And then we're able to bring back our summer camps in person at another price point and like serve, more students this way. And that, for us is really important. For me, I believe like we're a very mission-driven company, and that there's a need to create both like economic and financial value in a way that is aligned with like our social impact and like social value that we're creating.
Right.
Be able to serve more students, that's our impact, and then be able to do it at a range of price points, make it economically sustainable. That's how we, the strategy is called creating shared value. That's how we create both economic and social value simultaneously.
Yeah. And then just reflecting on, there have been so many kids that were cooped up inside. They don't get to be with their peers. They've been away from schools. It's been kind of a real crisis. There's been, you read about spikes in suicides and kids that are depressed. How do you think about the role that you've been able to play to help give kids some anchoring, give kids an outlet to connect with other kids who share similar interests?
That was a big motivator early on in the COVID crisis. Beyond just trying to get the business to like survive, but was like realizing like, how many kids are kind of stuck indoors and like missing that sense of connection and community with their classmates and like meeting people. And I really felt and continue to feel that Model United Nations and our platform, doing it online, virtually, it gave students a way to connect with other students, like in a virtual setting, to just like share what they're going through, right? And then, actually like make friends and make these connections like online, while at the same time, and I think this is the best part, is that they're actually building highly transferable skills, these lifelong skills. These are students that have to learn how to speak on Zoom. They have to learn how to collaborate on a resolution, like a working document, all online. They're also using Slack and like all these other tools and platforms. And I'm like, these kids are doing this kind of like negotiation and collaboration better than most adults I know, whether it's like business owners, entrepreneurs, or like the real United Nations. And I'm like, this is awesome. This is great. This is not like less than a regular Model UN experience. This is Model UN. And these students are still achieving the same outcomes that we would want to see, whether it was in person or online, which is understand more about the world, work on their public speaking skills, and become leaders. And I'm like, I'm seeing that online, I'm seeing that in person. And so that was a big motivator. And I'm really glad you asked that question.
It's so nice to have that North Star to help drive you as you go through such a difficult period, but to remind yourself that this is why we're doing this. This is why we do the work that we do. I want to circle back. It kind of comes back full circle to your corporate treasury experience and some of the things that you're seeing all evolving in the world of digital money, cryptocurrency, Bitcoins. But you said that actually it was around 2011 or 2012 or something was when you first started to hear about Bitcoin, but not until after the pandemic that you started to study it. So reflect on that journey and how you first heard about it, and then also when you started to really study it.
So that was like 2011. And this is I was in conversation with my oldest friends who I did Model UN with in high school. He ended up being a game designer at Blizzard, which you'd mentioned as one of the companies interviewed earlier. And I remember he gave me this like Wired article about like this Bitcoin thing and how he was taking his video cards and like starting to mine this thing. And I'm like, what is this? this sounds crazy.
Mm-hmm.
That is in 2011 when
I hope he held on to it and didn't lose it on a thumb drive.
Like that episode of Silicon Valley. No, no, he was pretty good with it, and he has created a successful gaming design career, but became an active trader in Bitcoin and I think other digital assets. That's just what I had that was my first introduction to it. Over the years, I would hear this thing when Bitcoin first spiked to 1,000 and then 10,000. Obviously, I followed the news with everybody else, but felt like, this old investing maxim, right? Don't invest in what you don't understand. And I held on to that. I was just I don't understand this. I don't think I should touch this. And that continued through the pandemic in 2020. I'm sitting at home like everybody else, and all right, let me learn about this thing. It's spiking up even more. But even then, I still didn't feel like I understood it. Only literally last month, when you and I connected, only then could I feel like I am beginning to understand a very, very, very small piece of this. But the amount that I understand, I feel like I see the matrix. I now see the numbers kind of moving around. And it really is, in my view, game changing. It really does change how we can approach business and finance and the internet. And
how so? How do you see it changing things for those who haven't studied it?
So here's I think the easiest way for me to try to explain it, right, to a fellow business owner, right, to an entrepreneur. Yep. If you have excess cash in your business or personally, whatever, chances are it's sitting in a bank account and earning what,
nothing,
0.1%, 0.2%, at best, maybe 1%, effectively nothing, right? Yeah. And with everything that's going on right now about inflation, it's actually just losing value over time.
Yeah.
But let's just sit with that for a second, right? And then what if I told you you could take that cash and put it into an asset that is backed by US dollars, right? So the price doesn't change. It's going to be $1. And yet that asset will yield between 6 to 10% a year.
And now we're not talking about Bitcoin here. We're talking about stable coins.
When people think crypto, they think Bitcoin, maybe Ethereum, but that stuff, we do need to understand that. But what really got me wait a minute, this is different, was realizing that there's a range of crypto assets, one of them being stable coins,
right,
which are backed by US dollars. And there's a range of these different types. So, there's nuance to it. But you can get, by converting cash into these stable coins, you can earn between 6 to 10% per annum. And
that's because the company that you're investing with is then lending your money out.
Of course, they're doing what
banks do.
Right. But in this case, we're talking about the exchanges, right? So crypto.com, Gemini, Coinbase, a little bit, not so much when it comes to the stablecoin stuff, but yeah, Gemini right now will give you 8% on USD coin and Gemini dollar. Right. Yeah. Crypto.com, if you're willing to lock it up for 3 months, right now will return 10% per annum. So, it's just that realization. And when I understood that, or when I realized that, and I started now looking into it, obviously it triggered my corporate treasury kind of training. I was like, wait a minute, we can be optimizing excess cash. I'm not even talking about stuff to that I want to play with, right? Stuff that I want to see a higher return on. I'm just sitting on cash.
Yeah.
And, what it really led me to thinking was wow, the way we think about, corporate treasury, the way we think about portfolio allocation, right? Asset allocation for our own personal finances. Academically, the way we think about modern portfolio theory. Again, I didn't study economics, right? It's just on this stuff. I was these things will need to change to account for what's going on in cryptocurrency and digital assets. And so I started just looking into it from that perspective. And that's when it unlocked like for me, like, oh, there's all this stuff that's going on that will change how we do business, personal finance, and again, like even the internet with the Web3.
Yeah, yeah. And then you worked on Wall Street for Goldman Sachs. Where are we in terms of the evolution and the adoption of these new digital currencies with Wall Street?
So I definitely can't. I'm not going to try to speak from like some industry
Sure.
expert. Like I'm not back on
Yeah,
Wall Street.
I've been out of the game for a while.
I've been out of the game, right?
Right.
But I have been thinking about it, which is from one perspective for like corporations, corporate treasury. Like I did, some search and like, yeah, they're looking into this stuff, and I realized like they must be interested in it. They're probably looking at it. There is going to be a need for regulation. They need corporate governance around it. From a really like technical perspective, like how do you manage the private keys of all this crypto? Or are you working with an exchange or like one of these, another bank, a custodian to manage it?
Yeah.
Right. So there's like a need for training and controls. So there's this stuff needs to happen, but I'm like, my view, this is purely like not investment advice. This is just like what I think. I'm just like, but that's just a matter of time, right? Like if I look at cash that generates 0 to 1% versus not the same as cash, but like something roughly equivalent that can get me 6 to 10, I should be allocating some portion to that stuff.
Well, that's great, because that was going to be my next question, was if you're advising a company that has $100,000 in the bank, $1 million in the bank, $100 million in the bank, whatever it is, how do you approach that? What do you say to them? What should they be doing with their money?
So I think that, again, just purely just my thinking and my view on it, and I am thinking about it in the context of my own business. Like obviously there's like one extreme, which is like 100%, just move it all at once.
Yeah.
Your excess cash into stable coins. And I'm like, for my own business, like I wouldn't do that. Like I'm not going to do that. But I do think something greater than 0% has to make sense. And then from what is the optimal allocation? I was like, what is the cost of capital of the cash I'm sitting on? Right. For example, if I got it through, again, government loans, they're at 4 to 5 or whatever percent.
Right.
What percentage of my excess cash do I need to allocate in, say, an 8% yield in order to, just neutralize the cost of funding? So if I'm sitting on like, I don't think I should try to do the math, but it's just like, a certain amount of cash that is costing me 4% a year, I should try to take half of that. And if I put it into 8%, it will actually balance out. And then the other view is, depending on what I think inflation is at, I could allocate a portion of my cash to counter the effects of inflation.
Yeah. It sounds like maybe it's partially just your risk tolerance.
So then what it really came down to, and what really I'm thinking about is like, and I think is the barrier for most business owners, entrepreneurs, is actually psychological more than like logical or academic.
Yeah.
Which is just new. Like we just need to get comfortable with it. Yeah. And my current kind of thinking and approach and talking through it with my own business partner is like, you know what, let's just take like X $1,000 and say every month we're just going to move that amount into this stable coin. And 6 months later, let's just see how we feel. Just take some small amount. It doesn't, it didn't even matter like how much. It's like, let's just try it. Because again, anything better than 0 is actually going to be better.
Yeah. And I'm sure you read the news like I do. I mean, there are, billionaires now that have allocated tremendous amounts of their net worth to Bitcoin, for example. Michael Saylor, who's the CEO of MicroStrategy, big Bitcoin advocate. He's saying borrow as much as you can in US dollars and put it into Bitcoin, because Bitcoin has gone up by some 140% a year over the last 10 years. As we record this, the last couple of months have been kind of shaky. But what do you think when you hear people talking like that?
I think you could say that. That's great. Like, I'm going to do my own research and I'm going to apply my own thinking to it. I really think there's just like a lot of information, a lot of data out there. And that was my own challenge, just wrapping my head like around that and like, who do I listen to and like what really matters to me. I do find myself right now, like just trying a lot of things, writing them down. I've got a spreadsheet going with like, here are the different ideas that I have, like what I see with where crypto is going. And honestly, just trying to keep more of like a curious and like learning mindset more so than like, I need to like do this now way of thinking. And I honestly think that, you know, the key word I think is like on-ramping. Like I'm still on-ramping into the crypto world. Like I'm going through these like these centralized exchanges, right? Crypto.com, Gemini, Coinbase. Like the next step is figuring out how to set up a wallet and like using that properly and protecting your keys and all that.
It's so different, isn't it? Like, you know, like these are things that we didn't either we learned when we were young, or it's always kind of we've known it for a long time, but all of a sudden even the means of holding the asset there's many different ways with big consequences for which way you choose to hold it.
So that I think is like the real underlying like thesis. I think it's a super big idea actually, which is like, yeah, that feels scary. I'm like, oh my God, I have my own wallet and like I need to figure out my private keys and all that. But what it's doing is like if traditional banking and commercial banks is like centralized finance, like, you know, the banks are capturing all this value because they're managing your money for you. And now there is an opportunity or like just this new field, this new possibility that allows every individual and every business to be their own bank.
Yeah.
And you can capture as much or as little value of that as you want because it's truly decentralized, which is like the nature of blockchain.
Yeah.
And so that's why I think like there's some, you know, like businesses, individuals actually need to understand this stuff in the same way that, you know, growing up, like, we need to study personal finance. You need to learn how to manage your money. It's just that traditionally that meant, okay, how do I work with banks to do that, right? Putting into savings accounts or investment accounts or whatever. But now I think there's a whole new field in personal finance that is going to need to include digital money. Like, how do I on-ramp? How do I manage a wallet? What percentage should I be putting here versus there? Right. And just like understanding it from kind of a fresh mindset, given that we actually can be our own bank.
Right.
And I think it's a very powerful idea.
Yeah. I mean, you know, I compare it to, it's not a perfect comparison, but Airbnb and Uber comes along and it's peer-to-peer money transactions, just like that was peer-to-peer lending out your car, lending out your house. It's not going through a centralized authority like those are. It's a decentralized authority, but it enables you to lend out something that maybe you couldn't lend out as easily as before.
Yeah. Yes. Quite literally. Like, people are just going down, I think, industry by industry, just thinking like, how would I apply, whether it's blockchain or even just the concept of decentralization to like this thing.
Yeah.
Right. Like we actually are in that era. And like, again, you mentioned like my friend, he introduced to me in like 2011. And when I saw Bitcoin going up, I'm kind of like, oh man, I'm too late. I'm like behind the curve or whatever. And then again, I'm like getting into this stuff now in the last few months. And I'm like, holy cow, this is still early.
Yeah.
Like we're still super early in this.
Yeah. A lot of people say that. Yeah. It's interesting. You know, it's interesting to hear that. And then it's also, you hear people who are like kicking themselves because maybe when Bitcoin got to $1,000, they're like, I'm too late, you know?
Right,
well,
yeah.
Turns out it had a long ways to go. Well, I know we're running a little short on time, so I want to wrap things up. We touched on so many different topics here. You've been very involved in entrepreneurs organizations, served as president of your chapter. And that leads me to my final question, which I always enjoy asking, which is my gratitude question. So, you know, if you look around at your peers and contemporaries, however you want to define that, others who've helped you along the way in the various different roles and fields that you've been in, companies you've run, who would you want to acknowledge publicly?
There's a lot of people that I can acknowledge. And I know you asked me to not focus in on like my own team, because that would be the first group, like my team, the customers, the partners that I have the pleasure of working with. If there's one person to acknowledge publicly, it would be my business partner, Kevin. He's the incoming president for EO Los Angeles. And so we've been on this journey together in entrepreneurship, and that's been pretty wonderful and pretty great. A lot of just learning along the way, also about crypto and just being better and better entrepreneurs, and maintaining our friendship through this time. So that would be my first, gratitude thing out. And then if there's a specific mentor I'd like to call out, I'm thinking of a longtime mentor of mine. His name is Paul. He's been mentoring me. He ran a way bigger business, and he's just, given me the gift of his time and wisdom. Much older gentleman than me. He's been meeting with me for years. And so really grateful to him as well.
That's great. Ryan, this has been fascinating. Where can people go to connect with you and learn more about what you do? And I should also call out, we didn't have a chance to touch on it, but you also do consulting through Cruise Consulting Group as well.
That's right. So if you want to learn more about Model United Nations, check out learnmodelun.com. And that's my K-12 education company. And if you want to learn more about what I do to help business owners grow the revenue, profitability, and valuation of their businesses, you can find me at cruiseconsultinggroup.com.
Excellent, Ryan. Thanks so much.
Cool.
Thank you for listening to the Smart Business Revolution podcast with John Corcoran. Find out more at smartbusinessrevolution.com. And while you're there, sign up for our email list and join the revolution. Revolution. And be listening for the next episode of the Smart Business Revolution podcast.